Good morning, traders. Welcome to Trading Together. I'm Mel Gacee. Today is Monday, March the 23rd. Welcome, everybody. How's everybody doing today? Thank you so much for joining me. And if you're here, I'd love it if you said hi, drop your name in the chat. Oh, Craig is here. Good morning, Craig. Good to see you. We are a friendly, interactive place. I love to have traders of all levels join me. We're going to take some live trades together if the setups arise, and we're going to do some market analysis and some teaching and training. So if you have any questions or comments, this is the place to add them. So, all right, Freaky Turkey is here. Good morning, and Dana Birkinshaw. Good morning, Dana. Thanks, you guys, for joining. I appreciate we have had quite the morning. Very, very eventful. Started today with a huge gap up. And look at that, we're beating our current top. I just traded this call. That's why I was just a minute or two late getting on here. Just traded this nice run right here and made a little money on it. But we are currently pushing a new top. And I am open to continuing to look at calls. I am looking at right now 662 calls. I'm not in them. I'm just looking at the moment. We are pushing a new top. It's getting a little reaction here at this. You can see I've got a resistance / support level drawn here. Let me get over to that chart. I can actually look at it. All right, so we just beat this high of day from Friday. This is, of course, the high of day that was on the ES, not the SPY. Those are a little bit different. They are actually calculated just slightly differently because of the way that the hours that SPY runs and that the ES runs. So I track the close of SPY from the 415, but the futures run just a little bit differently. So highs and lows of days are slightly different. Okay. I did like this call. I did take it. I don't know that I'm going to take it again. Like I said, we're getting a bit of just a slowdown right here at this. Oh, this is a ghost wick that I had previously marked off. Now ghost wicks are it's just the name I give them. They are these long wicks that appear for a split second. The move will happen super up or super down, and we'll get this big long wick. Usually they happen pre-market. And I'll be honest, I don't know exactly what causes them. I think my theory is they're just big orders that get loaded or maybe spoofed. I'm not sure. But I do know that we tend to respect those levels at some point. Usually we'll come back and visit the level the next day, but sometimes it takes a few days. All right. Let me see. I'm going to just zoom out here real quick and see if I can find out where I marked that level off. I know it was a few days ago. So let me take a look at that. Right here, 662 is the level that I marked. And it's because we hit it in some pre-market scenario. Maybe this one. Let's see. 662. Must have been right in here. Anyway, the point is, maybe this one. The point is, I noticed these movements pre-market and I mark them. And we usually do get, we usually move to that level and get some kind of reaction at that level. Jeff is here. Good morning. Good to see you. All right. So I have not traded. Did I trade any puts today? I don't think so. Let me double check. Oh, I lied. I did trade a put. Just one. Mostly calls for me today. This is a bullish run up. I did trade this little drop here. Honestly didn't make very much on it. So mostly all my trades today have been to the upside calls. And here's why. We opened up with about a 75-point gap up, and we have continued to climb. We've almost doubled the gap that we started with. 75 points. We're up at about 141 points elevated from yesterday's close, excuse me, Friday's close. And this is how we measure gaps. So let me show you. When we talk about a gap up or a gap down, I like to see them on the SPX. They're much more clear on the SPX because the SPX does not run 24/7. When I say SPX, I mean the S&P 500 index. Doesn't run 24/7 like the SPY and the futures do. Now, they don't run 24/7, but just about. They shut down for a few minutes every day, but not for long, right? So when we look at the S&P 500, it is really easy to see the gaps. These are the spaces between the previous day's close and the current day's open. So if you'll remember, red candles open at the top and move down. Those are, of course, the bearish candles. Green candles open at the bottom and move up. These are bullish candles. So when we talk about the gap being created between the open and the close, if you look at Friday's close, it's all the way down here. Like I said, remember, red candles open at the top, close at the bottom. The wick represents the low of the day or the high of the day, and the body represents the open and the close. This is the close of the day on Friday. This is the open from today. Remember, green candles open at the bottom and move toward the top. So this gap right here is huge. That's an enormous gap. And what have we done since then? Nothing but climb. And so this was kind of my thought this morning coming into the day. Would we get what we call a grind and go day? Basically, an upward trending day for the whole day. It's that it is what's happening right now. Can we turn and drop? Yes, we can. But pay attention to this. Where are we? Right here, guys. Do you guys remember? We look at it every day because it's very, very important. This line right here is the 200-day moving average. This is the averages are created when we add up the number of whatever the number of periods are in the average and divide it. We add it up, so they add the price up and they divide it by the number of periods, simple averaging. This is the 200-day moving average. So we took the last 200 days and we added them up and divided by 200, and this is the price we get right here at 66.25 on the SPX, the index. That is our moving average for the 200. What happened on Friday? What happened on Thursday? Oof, we lost it, right? So Thursday, they tried so hard, right? If you remember, we had that crazy run up during the day. We also had options expiration, which, as I warned you, could give us wild swings. So between the bulls trying to come back and grab this 200 and options expiration, we got this wild run up, pushed us up here, but oh, we got up over it. We just couldn't hold it. The bears were too strong. And what did they do on Friday? Oof, all the way down to where? 64.75, 64.72. Let's look at the low. 64.73. Crazy, crazy push downward. That was a sell day. That was a very, very strong selling day. We got a little bounce at the close. And I did buy calls at the close because of this bounce. And those paid off really nicely this morning with our open. So that gap, again, was created from Friday's close to Monday's open. Nice gap up, and we've done nothing but climb ever since. We've recovered the 200-day moving average. That is bullish, bullish, bullish. And if we pull back and we take a look at some other times when we've recovered the 200, we can see that many, many times it's pretty bullish, right? Sometimes it's not, and sometimes it's just a waterfall downward. But a lot of times, let's zoom out and look at this. Let me make this a little bigger for you. Trust me, I'm watching the SPY here. We are just chilling out right here at this level that I had marked off previously. 662. We're just chilling here, not going anywhere. Do I want to trade a put here? Not yet. Yes, we are pretty far away from the VWAP, so we could trade the idea of the reversion to the mean, right? That's a thing, right? It's not just a thing in stock trading, it's a thing in life. We use mathematics, I should say. We usually find that we revert back to the mean average, right? And so here we go. Could we trade mean reversion? Yes, we could. There's a big gap between here and the VWAP. We've got a rollover on the MACD, got a little bounce on the VIX. I'll get back to my daily analysis here in a minute. I'm trying to decide if I want this put here. Let's take a look. Getting a little push up here. No put for me right now. But I am watching. All right, we'll get back to our... It is trying to break this 21 here. So if we did take a put, I would take the 661s. Nope, I lied. The 663s for today's expiration. There's a nice little bounce there, though. Johnny Tran, good morning. Good to see you. Gavilan is here. Roger is here. Thank you guys so much for joining. Roger, how's my favorite scalper today? Roger, I'm happy as a clam. I'm having a fantastic day. Made my goal and plus much, much more. So I hope everybody also is having a great day. Val is here. Good morning. Thanks for saying hi, you guys. You know how much I love to know that you guys are here trading with me. All right, 661 puts, 662 puts, it's jumping. It is trying to break this 21 here. It is a counter trend trade, so I'm cautious. You guys know, I prefer trading with the trend than against it. Our VIX has given us a little test of this overhead resistance, so I'm careful here. I'm going to give this one small trade, a quick one on the put side. I'm in. It's definitely a counter trend, so I'm going to be careful. Just fooling around here. I'm going to jump out right here. That's a break even. I'm out. Like I said, oh, of course. Of course. That's all right. I'll take the break even. Actually, I made 1 penny on it. Got in at 164, got out at 165. No big deal. Hopefully covered the commission, right? Nice little drop here. And we're just testing the 50 right here. This is the 50 period moving average exponential. We broke the 21. That's what I traded, that break of the 21. I won't trade it again, even if it keeps dropping. That one felt trappy for a while. It was holding the 21 pretty well. It was freaky. You are correct. It did. Held it there for a few minutes. Now we're getting this little drop. And again, what I was trading was reversion to the mean, a little break of the 21 here, but it was counter to the trend. So I'm very, very cautious. I will jump out at a break even lots of times. Of course, it is dropping, and my direction was right, but that doesn't bother me. It does not bother me to see a trade go in the direction that I called if I took a break even on it, because I trade 20, 30 times a day. I take break evens, I take losses every single day, but most days I end green. And for me, I understand it's a process, especially the way I trade, which is scalping in and out really quickly. There's our little break of the 50. All right, I won't trade this move again. We did get this little congestion right here. And isn't it funny how I was just saying these pre-market levels, they get hit, they matter. And look at it, hit it here too. Hit here and reversed, hit here and reversed. So not saying that's our high of the day, but as of right now, it is a double top. That is exactly what we would call a double top. Ping, ping, right there. Okay, look at that drop. Look at that drop. Am I FOMOing? No. It's nice. It's nice to see that I was right, but, I didn't make any money on it. That's okay. There'll be another. Okay. So back to our daily, what we were going to look at is what normally happens. So this is really important in technical analysis. This makes up a lot of how I do my technical analysis. And that is, I want to know what happened before. When did we see this setup happen before, and how did we respond? Lots of times that'll give me this, and I'm talking big picture macro analysis. I like to see when we've been in this situation before, how did we respond? And then I like to look at, if we've been in the situation 5, 6, 7, 10 times before, what's the percentage? What's the probability that we will respond in a certain way? So I'll go back in time. I'll look at what it looks like probabilities wise. How does it look like we're going to respond this time? All right, getting a little punch up here. Not going to trade the call because this overhead stop is not far enough away. We are sitting at 661.6 and our top here is 662.3. So I'm not going to trade that. There's just not enough room from here to here. Now, could it break through and keep going? Yes. Am I okay missing that? Yes, I am. Because right now we've held this top twice. If we hold it again, this would be a losing trade. So I'm not going to take it. The risk isn't worth it. Okay, so now as this is doing its little thing here, I'll be watching it. What I want to point out is how many times have we crossed the 200 over the last couple of years? Because we got to look sideways. We got to look left for a while here to catch a few examples. But first, let's analyze the current cross of the 200. What is the current cross looking like? It looks like we touched it. So this is about a 4-day pattern that I'm looking at right here. You could say 7-day if we counted these two, but no. So we touched here, and that was Wednesday. We broke down, tried to recapture on Thursday. We broke way down on Friday. And then we had a big gap up over it, recaptured it on Monday, which is today. Now, this day isn't over. This candle isn't complete, but as of right now, we are recapturing the 200. So what I want to do is look left and see how many times have we done this little V below the 200 and recovered and continued up, or rejected and continued down. So I want to look at that. That's how I kind of try to figure out the macro environment, right? So the most recent break of the 200 happened about a year ago in March of 2025. We broke the 200 and we fell down for about 4 days. So this pattern is not similar to the one we're currently experiencing. But then we came up and recovered just for a day, 2 days, and then boom, dropped it again. Could that happen? Yeah, I think we're in an environment where that absolutely could happen. We are in a bearish environment. We have been in a bearish flow. That doesn't mean we'll continue that way, but so far that's what we've been doing. And so could we come up and kiss this 200 and then let it go? Yes, this is called the kiss goodbye pattern. Break down, come up, kiss that line, and then whoosh. That's the kiss goodbye. So this pattern is saying, if we're in this same similar macro environment where we're in a bearish trend down, which we are, could we come down, recover the 200, and then lose it again? Yes, we could. Now, this is an extreme move. These don't happen all that often. We've seen one of these moves in the last, 2-3 years. This is an extreme move. We've only seen it once in the last couple of years. Let's go back a little farther. Here's another example of breaking down. Now, were we in a negative trend? Yeah, we were in a negative trend. It was a little different than the trend we're in now, but you can see we're still trending down. We hit the 200, we saved it, we bounced, and then we lost it. There was one day, let me zoom in so you can see it. There was one day on this pattern where we recovered the 200. That looks a little similar to our current pattern, doesn't it? Broke it, recovered it, and just closed right on it. That could be our current pattern. It absolutely could be. And then whoosh, we lost it for 3 more days. But then it recovered and continued up. So here's another example of little mini kiss goodbye, right? Came down, recovered, lost it. Okay. So that's 2 examples where we tried to recover and lost it. Here's another. Came down, bounced. So it came down, touched it, bounced, and then broke it right here. Came down for 2 days, and then bounced and recovered. So it's a little different than our current pattern, but we could see some similarities. This is an example of it breaking down and recovering and not looking back. Could we get that? Yes, but our macro environment is just a little bit different because this one isn't really, it is trending down, but this pattern looks different than the pattern we're in right now. This pattern had broken down from a higher high, and it's not the same round over that we're looking at right now. However, this could be what we do. We could recover the 200 and just fly and just keep going. All right, we're getting another move down here. Do we want to consider puts here? We're getting a little bounce on the VIX. Right here, we did bounce up this zone again. Sitting on the 100, right here, the 100 period moving average. We're kind of in a little bit of, this is a little bit rangy right here, and we're kind of right where we were. I don't think I'm going to take the put. It feels like the real move started over here So I'm not going to take it. Okay. Let's look at one more example of a break of the 200. Now this is yikes. This is where we lose the 200 and we really struggle to get it back. So this is over here in 22, right? Well, of course, that was, that was a tougher market in 22. So in this case, we lost the 200 and ouch. We struggled for months to get it back. It took months and months and months to get it back. Could that be our environment? It could be, guys. I don't want to be doom and gloom, but it could be that we continue on in a downward trend into 2026. It's kind of a known fact that we do tend to have a little bit more of a negative market in a midterm election year. Also, we've had two back-to-back double-digit returns for the last 2 years on the SPX. So 25 and 24, double-digit returns on the SPX. How likely is it that we're going to have another good-sized return on the SPX? It's very unlikely. If you go back and do the historical analysis, it's very unlikely. It could happen, but it's unlikely. So that's kind of how I determine what the macro picture looks like, especially when we're looking at something so serious as the 200. Remember that algorithms are actually programmed on things like the 200 and the 100-day moving average, among other things. And some algorithms, they got just automatically set to sell when we lose the 200. So we will see. Right now, this is a rounded environment. We went through a distribution phase, and right now we're rounding down, but we've got a nice big push here. Is this nothing more than a really strong dead cat bounce, or maybe half dead cat bounce? And then we continue downward? Or do we start to see a V-shaped recovery? That's what we're going to have to watch. But what happens here at the 200 is crucial. So we will keep our eyes on that. All right. Sitting right here on the 100 on the 1 minute chart. There we go. Let's come back over here to our minute chart and see what's going on. Sitting right on the point of control. And that is an indicator that I use. It's called the volume profile. And it's similar to the VWAP because it takes into consideration how much volume we are producing at a given price. So where these volume bars run vertically, telling us the volume by time, these volume bars, you can see them here, run horizontally, telling us where is the volume by price, right? So on this candle, we can see in this minute, there was an increased volume, but it only tells us the time. This bar tells us the price. So most of the trades are being placed right here at this level, which is exactly where we are at, 661 on the SPY. That's where most of the trades are being placed today. That's our point of control. So right now we're just sideways until we make a decision over or under this point of control. So I'll be watching for that. Looks like we're breaking right here. Also, the point of control happens to be sitting at the high of day from yesterday, not on the SPY, on the futures. That's not an accident. These levels get respected. So yesterday's futures, Friday futures, this was our high of day. So these levels do get respected. That's where our point of control is sitting right here on this high of day. If we come down and break through it, and start heading down here toward the VWAP, we could consider puts, although the move is a little old for me, a little bit old. All right. Breaking the 100 here. Let's see if they try to hold it. Still really just kind of sideways on this line. The other thing that gives me direction as I'm wading through things like this is looking over here at what I call the leaderboard. It's nothing more than my watch list. But what I keep on my watch list, a few things I keep on my watch list. Okay, breaking the 100 here. Could we try for a put? Like I said, it's a little extended. But I do think we're going to come down and test that VWAP. That's what it's looking like. Here's our little zone right here where we stopped before. Let me zoom out. See this little zone right here where we held? We haven't broken that yet. 660 is that level. Okay, little test here of 660. Could we try a put here? Yes. I would be looking at the 661s for today. If we break this little zone here where we held before, we could up. Let's see what we got. You can see it a little more clearly on this side. Right here, sitting right here at this little holding zone. VIX is giving us a little move up, 24.5 right now. Right, little response here right in this zone. Right here, you can see it responding right here. So while I'm waiting for this zone to get tested right here, yep, it is testing. Okay. That was a fast candle. Didn't give us much of a shot. All right, I'm going to take one small position here on the put. I'm in. We are right at the VWAP, so we got to be careful. That was a quick move down. A little bounce. We get a bounce off the VWAP. I'm going to jump out quick. See if we can get a little break of it. That's a bounce. There we go, little break of it. All right, I'm out here at 7%, punch it. 247 to 259. We could still fight the VWAP or we could drop farther. That was a quick little win there. Good trade. We're getting a little bounce here on the VIX, back up to almost 25. And this is the one thing, I said this earlier, the one thing that has my attention today is this elevated VIX. All right, Craig, read the time. You bet, Craig. I am sitting at 11:39 and 53 seconds Eastern. Let me know what yours is, Craig. I'm curious. All right, little trying to recover the violet. Well, trying to hold it here. Let's see what we get. Oh, I took my VWAP off of the ES. I need to put that back on. 5 to 10 second delay, Freaky. Okay, 5 is acceptable. 10 really is not. So if you're getting more than 5 seconds, try refreshing your browser, you're refreshing your, maybe closing extra tabs. All right, we are breaking the VWAP here, guys. Where's my VWAP? There it is. Oh, it's on. Why can't I see it? Oh, it's below us. That's why. Where's our upper? Way above. Okay, that's crazy. All right, still coming down here. What did you get, Craig? What was your delay? All right, there's a little push back up through the VWAP. Now, this call, we're not there yet, but if we continue to recover the VWAP, I'm interested in a call, and I'm going to load up the 659 calls. I don't have signals yet. I'm just anticipating. All right, so while we wait for this VWAP to wait for price to fight with the VWAP here, we'll talk about what I'm looking at for leadership. I always look at all 4 of the indices, the major indices, so the Dow, the Russell, the NASDAQ, and the S&P 500. As you guys know, I'm only trading the SPY. I trade the SPX, but mostly only the SPY. And the reason for that is because I like 0 DTE. That means I like options that expire today, 0 days to expiration, 0 DTE. I like options that expire today because the profit is so much bigger than, weekly options. You don't make the same amount of money on a weekly option as you do on a daily option. Of course, you don't lose as much either. So I'm always cautious of the risk of trading a 0 DTE, but that is how I've developed my strategy, and that's what works best for me. So I trade the SPY because it's heavily trafficked. It's highly liquid. I never get stuck, right? If you're trading thinly traded stocks, you're going to have big spreads. You're going to get stuck if there's nobody on the other side of your trade. That almost never happens on the SPY. On the SPY, there's very small spreads, meaning the bid ask spread. So you buy, the bid ask spread is you buy at this price, you sell at this price. There's always a spread there. And that is what the market maker keeps. So let's say, just for easy numbers, on the SPY, we buy it for $1. We would sell it for 97. That spread is always in play, always. And on the SPY, it's only a couple of pennies. But on thinly traded stocks, that thing can be dollars wide. And you will get stuck not being able to make a profit on a stock that's thinly traded because the spread is too big or because there's nobody on the other side of your trade. So I trade SPY for that reason. It's highly liquid. The spread is small. I can get in and out. Market orders work for me. I don't trade limit orders because I'm moving in and out of the SPY and there's always someone on the other side of my trade. So that's one of the main reasons. All right, we're coming back up to the VWAP here. If we get a break of it and we get the MACD to start rolling, I would consider calls, but we haven't broken it yet. It's just fighting here. So that is why I trade the SPY. But on my leaderboard, my watch list, I am watching all of the indices for leadership. Now, the Qs, the NASDAQ almost always leads the S&P 500. And that's because the NASDAQ is the index that houses all of the tech stocks. So the NASDAQ is the tech index, right? The S&P 500 has 500 big, nicely performing stocks, but it is heavily weighted toward the big tech giants: Microsoft, Meta, Apple, Amazon, Google, Nvidia, Tesla, Broadcom. It's heavily weighted toward those big tech guys. About 40%, 35 to 40% of the S&P 500, about 35 to 40% of its value is derived from those major tech stocks. So as the NASDAQ moves, as those tech stock moves, that's how the S&P 500 moves. And that's what I look to for leadership. You'll almost always see the NASDAQ leading the S&P 500. Sometimes it flips, but usually that's what you see. All right, this is a clear loss of the VWAP. We are continuing down. That is something to notice here. Look at this, guys. Look at this VIX. What I said earlier this morning, I'm cautious with the VIX being elevated with such a big gap up. We should not have been this elevated on the VIX. So that was the one thing that kept me grounded on this idea of, are we going to gap and go today? Are we going to climb all day? The one thing that had me cautious was the high level of the VIX. And here we are getting a pretty decent sized drop. Now we are certainly still very elevated, 1.5% up, but this is a decent drop here. And we only made 7% on our put. We could have made more, but I'm telling you guys, I never, I don't let that kind of thinking influence me, because my small wins and my high win rate adds up and keeps me pretty profitable. So did we leave money on the table? Yep. Do I care? Nope. I do not. Because I have come to make peace with the fact that I will never catch every top and every bottom of every move. That is impossible. My goal is to catch a slice of the move. I want a slice of that pie. I'm not trying to get the whole pie. I just want a slice. And my wins add up. So it works for me. Okay, back to our leaderboard. I really want to see this VWAP get recaptured and push up. But right now we are trending down since about 11:10 Eastern. Okay. All right, so watching the indices, like I said, the NASDAQ is usually the leader for the SPX. And you can see that almost every day. Take a look at where the NASDAQ is currently trading right now up about 1.6%, where the S&P 500 is up about 1.58, 1.6. So the NASDAQ is just a little bit ahead of us. And then the Russell and the Dow sort of take turns leading as well. The Russell is up today by 2.8%, 2.76. That's very significant. 2.8% is huge jump on the Russell. Very, very big. Now, Russell was down pretty significantly as well. So good to see that jump on the Russell. The Dow is currently up 1.97%. So as far as the leaderboard goes today, the Russell is the index that is giving us the most gain, and then followed by the Dow, followed by the NASDAQ, followed by the SPY. So when you see that we're at the end of the run of the move up in terms of percentage, usually that'll give you the idea that we will probably go in the direction of the other three indices. David Neely, hello, good to see you. All right. Now, the other leadership that I look to, and you guys know this if you've been following, is I look to those tech stocks that I just rattled off, right? The so-called Magnificent Seven. I look at those individually and I look at them as a group. And one way to look at them as a group is this ETF called MAGS, MAGS, short for Magnificent Seven. This bundles all of them together in an ETF, and I track the movement of that ETF. Gives me an idea of the movement of the whole group of the Magnificent Seven. So right now, those MAGs are up 2.0. So again, all of these guys up ahead of us, right? That tells me we probably still have some more room to move up. That's what it looks like to me. Craig, for those that haven't yet, please consider giving Mel a thumbs up. Thank you, Craig. I appreciate you. By the way, Craig, what was the delay when I read off the time? I'm curious what the delay is that you all are getting. Freaky was giving me his delay, saying it was about a 5 to 10 seconds. All right. All right, no move up yet. We are still fighting, but we haven't lost the VWAP significantly. We're just kind of fighting here. Let's see what we get. 6 seconds. Thank you, Craig. It's just a little high. I don't like that. All right. So that's how I use my leaderboard. Okay. All right then. There is a big red bar right there. Strong drop. Now, sometimes these types of moves signal that we're going down. Other times, these are what I call inducement candles. They are designed to get you to jump in before they reverse to a different direction. I'm not saying that's what's happening here, but I've seen it over and over where you get these big candles and you just want to, your initial reaction is, let's jump in, right? And sometimes they do, right? Sometimes they do signal that we are going down in this direction. But other times they are reversal candles. So that's why I'm always careful at a big candle. Let's see what we get here. One voice. Good morning. 30% on a SPY put. Nicely done. When these candles show up and you're already in that direction, jump out and take that win. Nicely done, One Voice. Glad to hear it. All right. I am going to load some calls here, but we are a long way from calls. But I think we're coming. I think we're getting there. 657s is what I'd be looking at the moment. Not taking it right now. I'm going to wait and see. We could just continue on down and drop here. This is a negative. This is a negative flow right here. And it has been since 11:12 Eastern. So I'm not trying to buck that trend at all. I want to see real confirmation of a change of the move, but I'm not trading the put here. I'm not doing it. We are currently sitting at 6,600 on the SPX. I would expect this level to be defended. And if it's not, I'll be surprised. $66.01. I am expecting a bounce from here. If we break down through 6,600, we could consider puts, even though this has been an awful long move. We could, but I am expecting 6,600 to get defended, to be defended. Look at the VIX popping here, 25.8. Little break here, 65.94, yowza. Okay, this is negative. Down 1.3. Q's coming down. Mag's at 1.7. All right, 65.97. Let's see if they're trying to hold it. And this also corresponds with our high of day from Friday. Quite the selling going on here. Wow. $65.93. We do have support below us at $65.75. Do we want to jump over to a quick put? 657s. It's already been such a long move. I'm usually nervous about that. But it is a break of 6,600. Hatman, hello. It's giving us tiny slowdown here right at the high of day from Friday. 65.90 on the SPX. Just wait and see how it responds to this line. All right, losing it a bit here. We're getting real close to our opening range where we opened the morning. Wow. 65.85. So let's talk about the rest of the day because we're at the end of the stream. We took 2 trades this morning. One was a winner, one was a break even. We are completely back to where we started this morning. So here's our open right here. We came all the way up and all the way back down right here. Let's look really quickly at the 200. I want to see. Remember, that's the big deal. That is what we're watching. So let's see what today's candle is giving us. Oh, a little bit. Ooh, little rejection there. You guys see it? Take a look. That's a rejection. Keep your eyes on this. The bulls absolutely have to come up and recover this. Absolutely. At 66.25. So we'll keep our eyes on it. If we can get up here and recover it or even start heading in that direction, I'm open to calls, but this is certainly a negative rejection of the 200. So keep your eyes on that. Watch the VIX. Remember, the VIX was too elevated for the pump that we had this morning. So keep your eyes on the VIX. Keep your eyes on this 200. Watch how we treat the VWAP today. And if you're going to trade, make sure that your indicators are lining up. It is safer always to trade puts below the VWAP and calls above it, but that's a guideline. You have to sense, use your other indicators, your moving averages, and so forth. I'm open to calls and puts both ways. As you know, I've traded both ways today, and I am open to that. But I'm going to keep my eye on what happens here. This is negative, very negative. So bulls really need to get on the stick here and recover this, or this could really begin a waterfall. If we can't recover that 200 today, that could be a problem. So keep that in mind, guys. It's been a pleasure. Thank you so much for joining. I enjoyed taking our wins together. That was a lot of fun. I'm having a great day. I hope you are too. And we'll be back again tomorrow at 11 a.m. Eastern. Thank you guys so much. Take care and bye for now.